All right. Well, I'd like to welcome everyone to this presentation on how you can average between 2 and 4% daily return on your investment and never risk more than $100 per contract traded. My name's Michael Guess, and I'll show you who I am in just a moment. And I'm the president and CEO of TradeSafe. And I'd like to show you today how an objective, rules-based, Boolean logic mechanical trading system. I know that's a mouthful, but it is going to add up to what you really want. You want consistency, because a lot of people will say, oh, you can hit a home run and so on and so forth. All most traders want is consistency. With that being said, I want to make sure that, of course, all of you can hear me. I'm not able actually to see any questions. So I guess if people ask questions, I'm going to have Jeanette help me out on that, because the chat window is the only one that is open.
Hey, Michael. Okay, so you see the window that, or the little.
I do now. Okay.
Questions, you pop it out. They're really tiny, but you know, I would recommend just trying to get through your content and then go read the questions.
I will. I know.
And I'm right here. If something happens and you need my help,
run over.
All
no
right. worries.
Okay. Folks, this is who I am. I've been a professional day trader for over 23 years. And I started TradeSafe almost 19 years ago. I've graduated over 3,000 students. I've created a host of indicators and mechanical trading systems. And in a past life, I used to be a psychotherapist. So I bring to the table a lot of skill sets around trading psychology and discipline. And let's face it, that's very critical. But you might say, okay, fine. Am I in the right place? Who is this really for? Well, first of all, if you've ever been or wanted to be a day trader, and it doesn't matter whether it's stocks, forex, ETFs, futures, commodities, or the minis, this is definitely for you. But if you might say, oh shoot, I'm not interested in day trading, I'm more of a position trader. If you're a swing trader and you want to get the best opportunity for an entry, this would be for you. Options was discussed in the previous presentation. Let's face it, if you want to have the best possible options play, you're going to want to make sure that you correctly assess the underlying instrument. And this system will show you how to do that. And again, like with swing trading, get in at the best possible intraday price at the lowest risk. Now, a lot of you say, well, you know, I don't know if I have enough time, but I would like some extra money. Yeah, supplemental income. Wouldn't you like that? Of course you would. Now, if whatever you're doing right now is working fine, or maybe it's not, this is going to complement whatever you're doing and offer you some additional tools in your trading toolbox. But the bottom line is, I doubt that maybe 1 out of 10 of you here today have what I call the real holy grail of trading, and that's consistency. And what you're going to find out is that consistency is your key to the returns that you've been seeking. I would like you to take a look at this screenshot here and tell me what's wrong with that. I mean, it's pretty obvious. And I know when I started out as an amateur 23 or 4 years ago, I ended up loading my charts with everything possible. I thought, okay, the flavor of the month, I read about it in stocks and commodities. I heard about it in this or that webinar, although there were no webinars back then. Yeah, that's right, William. It's too busy. And somebody's got a tongue-in-cheek saying, not enough indicators. Okay, here's the problem. Indicators by themselves, as I learned quickly enough, aren't going to cut it. What you really need is more than just, oh, your very favorite indicators that you've heard about. You need a true rules-based Boolean logic mechanical trading system. It has to be rules-based. No subjectivity. None of that shades of gray. I can promise you that anyone that trades the TradeSafe system will absolutely know when the conditions are met, and when to enter, and even when to exit. No guesswork, front to back. The system's been proven and back-tested over 20,000 trades. And it's all been made possible because of something called cycles. You see, there's a myth around day trading, and it's largely true if all you're trying to do is sit down and try to punch into a trade. Once something starts moving, you get basically numb butt and eye strain. But did you know that you can actually pick out the best possible times of the day to do your day trading? You don't need to be glued to the monitor. So really, part-time trading is actually possible. But in order to do that, you've got to be able to see what the big picture is, and you want to align yourself with that. You know, most people are only thinking in terms of getting into a trade. They're on some little dinky 1-minute chart, for example, and they don't know whether they're going with the flow of the bigger trends. So kind of like that camcorder over on the right part of the screen, you can zoom out and you can zoom in, and you do that with multiple chart settings. I call them time frames. And each market has its own signature. Each market has its own settings for the time frames. You don't want the generic drop-down stuff like hourly and 30-minute and so on. That's why they're called generic. You want something really specific. And when you have that, you can adapt. So when you know the correct ratios, like these three charts right there, you can see that the bigger setting chart on the left, it's in a downtrend, and I'll show you what that means. No higher highs, higher lows, or lower lows, lower highs. That's another myth. It gets you nowhere. It's subjective. What you need is a true system that will identify a real trend on each of the charts. So that first chart, definitely in a downtrend. If you zoomed in 300%, a 3-to-1 ratio, then you would have a more close-up view of what that trend is doing on the middle chart. And if you want the lowest risk surgical entry, you're going to choose that last chart on the right. This means that you get a tailored approach. No one size fits all. Everything is based on the strength of the trend. That's right. This is a trend following system. Nothing fancy. None of that extra risk like counter trend trading, breakouts and range trading and all that stuff. Trend following is universally considered the safest and easiest way to trade. So once you know that you have alignment with your specific chart settings, you're going to enter a trade and manage the trade based on what the market can give you. Now in a longer presentation that gives more time than I have allotted here today, I go through an explanation, a formula that I give away for free to all the attendees that will show you how to figure out what is the actual correct settings for the charts that you would use. But a lot of people like to trade what are called the minis, you know, the Dow, the NASDAQ, the Russell, and so forth. Those are the indexes or indices. Well, I'm going to give away right now the settings that we use in our actual system itself. We use a 9-minute for that wide angle view of the market. We use the dominant trend 3-minute. And for the low risk surgical entry, we use a 1-minute chart. Now, obviously, you want as many of them trending together as possible. But if you don't, then you're left to wonder, well, what should I do? Well, we want you to maintain a 3-to-1 ratio. That gives you that wide angle, normal view, and close-up view. And of course, if you want to make sure that you have more entries than you might possibly get signals for on a 1-minute chart, we supplement that. We give you tick charts in addition to that. So as I said, in a different presentation, and I will provide that to you in a follow-up email after I get the list of who attended. That might be a few days from now, but please be patient. You'll be able to see how in that longer presentation you can actually figure out the correct settings for whatever market you trade. So let's use a symbolic example of what do you do if the different chart settings are going in different directions. Let's say that 9-minute chart, if you're trading the minis, is going up strongly. You have your dominant trend. Each of these lives in its own little world, is kind of meandering down in a downtrend. And then your 1-minute low-risk surgical entry chart is in a very, very strong but brief rally. Notice that no two adjacent arrows, symbolically representing chart settings, are trending in the same direction. Optimally, this is what you want. So right now, I'm going to give away a second thing for you to use and practice with your own day trading. And it's a rhyme, a teaching mnemonic that helps my students remember how they can choose which exit strategy is the right one. Because using that baseball metaphor that my predecessor in the last presentation used, I'm going to trade on that, pardon the pun. If you got the wind at your back, you want to swing for the fences, right? If you don't, and you don't have very much, maybe all you want to do is just bunt and get on base. So here's how the rhyme goes. The minimum is the 1 and the 3 need to agree. Best is if all 3 agree. That's your 9, your 3, and your 1, and that includes the tick charts. This gives you, when they're all trending together, up or down, the potential for a really strong move with a lot of follow-through. Consequently, you're going to want to choose an exit strategy that keeps you in the trade longer. What would that be? Scaling out. You would hit an easy-to-reach target, you would pay for the trade, and you would take off part of your position, half of your position, and you pocket that. That's closed profits. They can't take it away from you. And then you would trail a mechanical trailing stop using one of our indicators that shows you exactly where to trail the profit stop, and you'll let the market take you out. No guesswork. Oh, I get out at Fibonacci, support or resistance, or market profile. Haven't found them to be consistent. I've got 4 exit strategies that are tailored for the different kinds of strength of trend. So what if you don't have all 3 of your charts trending in the same direction? What if only 2 of them are trending in the same direction? You need at least the entry time frame. That's your 1 minute or the tick chart. And you need the next higher time frame. That would be your 3 minute. Again, this is for the minis. If just those 2 are trending together, well, you might have something that's worth taking a trade on because you have trend agreement. You have some wind at your back. But that's going to be a weaker, briefer follow through. So what would be an appropriate exit strategy? Scalping. So this is going to give you a roadmap to winning. So let me see what kind of questions we've had here. I've already said earlier, it'll work on all trending markets, Gary. It doesn't matter what you trade. Okay? So you can use this on any trending market. Now, some markets don't have a personality that trends very well, if you don't mind my saying that. Crude oil is one of them. It tends to congest and breaks out and fakes out. If you wanted a energy complex market other than crude oil that did trend, well, I would choose natural gas, for example, or currencies. They're great trending vehicles. You could trade the 6E, the euro. Got it? All right. So I don't know what you mean, William, by footprints, so you'd have to spell it out. And Gary, you're saying in reference to the minis, if you're talking about the spiders and the Qs in reference, I'm not sure what you mean in reference to the minis. Here's what I would like to do. Rather than answer too many questions, I don't want to fall behind. I'd like to take you straight away from this very, very simplistic explanation. Again, normally I go into a lot more detail, but I do want to take you to the charts. And I'll answer any other questions after I finish with taking you to the charts. So in order to do this, I'm going to have to pause my screen and I'm going to minimize my presentation. and then I'm going to take you to the charts. So you should be able to see that. Hopefully you've been seeing everything I've been doing.
I can see it. It looks good, Michael. It looks good and
Okay,
clear.
great.
Love that
Great,
layout. Looks great.
All right. I appreciate the feedback, Jeanette. So, and yes, Bill, I do trade currencies. So I already said that. So here we have a single screen with several charts assembled together. Yes, you can use multiple monitors. No, it is not necessary for day trading. It's kind of a macho thing. As a psychotherapist, I learned a long time ago that too much multitasking is actually going to negatively impact your focus, your ability to be a successful trader. So at most 2 or 3 monitors. If you have more than that, actually you're shooting yourself in the foot, believe it or not. But limiting technology requires me to put all my charts on one monitor so you can see them. I'm going to close this little data box for a moment, and I'm going to point out with a quick tour what you're looking at. Okay, I don't know where that came from, but we'll get rid of it. Dead center is the 1-minute chart that predominantly you will probably take most of your trades on. I mentioned tick charts are also available, and that gives you additional trading or entry opportunities, and that's over here. I've got a 233 tick chart and a 144 tick chart. But you want trend agreement before you even enter a trade. So over here we have a 3-minute chart, and over here, pardon me, we have our 9-minute chart. So I'm going to get a swallow of water so I don't go hoarse. There we go. Now what I'm going to do is very quickly just kind of move this over to the middle. And even though, yes, I've got candlesticks here, there is no candlestick theory whatsoever inside of the TradeSafe system. I just happen to like candlesticks because they're easy to see. Also on the chart are these resistance and support levels that are plotted automatically by a swings indicator. And you may be asking, hey, what software are you using, Michael? This is NinjaTrader. So a lot of you might be using things like Thinkorswim or stuff like that, and they're fine for options trading, but they had day trading grafted on after they were created, and they aren't up to speed as far as professional grade day trading. I'm in Austin, Texas, and in Texas we have a saying, don't take a knife into a gunfight. So even if you're successfully using your Thinkorswim for your options trading, if you want to be committed to day trading and make that work for you, I would highly recommend NinjaTrader. My system is written for NinjaTrader. Okay? Now otherwise, other than these resistance or support levels, they're just plotted there for convenience. Same thing goes for floor trader pivots, not really part of the system. But a critical part of the system, that's the trend indicator in this subgraph or panel down below. It is simple. It's green for an uptrend, or it's an off red or salmon color for a downtrend. And it utilizes 2 separate and discrete methods of detecting trend. One of them is based on a moving average crossover. That's been around since the 50s, but with today's newest technology, we've taken advantage of that and moved it to a much, much higher level. And instead of, oh, subjectively, it just crossed, we require specific confirmation conditions. We also have a separate method that acts totally independently. They don't talk to each other. And that's a break of support or resistance with follow-through. Now that phrase alone is open to interpretation, right? Well, again, we have specific confirmation that's built right into the indicator. So it's very simple and direct. Even if you don't know the logic behind it, you'll see that it went from a downtrend here using this little colored band to let you know, hey, the moving average crossover method signaled a change of trend to up, and now we're in an uptrend. So with that being said, I'm going to park this chart. I'll show you what the 3-minute looks like. This does show a lot of overnight trading or Globex. The 9-minute filters it out to get rid of the noise. Here's the 1-minute chart that we are going to use right now for a sample trade. And I'm going to bring back our data box. This is wherever you put your cursor, you get the usual open, high, low, close, but you also get the readouts from our specific indicators. And I'm going to give you a little drawing as best I can. This is, after all, a trading platform, not a graphics platform. Assuming that you are in an uptrend and it's following this path right here. Classic trend following says that if you get a pullback, a retracement, then it's like a stretched rubber band. It's going to want to snap back. And this is your optimum sweet spot for wanting to position yourself for when the market does start that snapback. And there's a host of other approaches out there. I'm sure some of you have tried them yourselves even. But the problem is they're not specific, they don't have tolerances, and they are open to interpretation, unlike the TradeSafe system. I'll give you an example. We already know that you're clearly shown a trend here. We already have shown the 9, the 3, and the 1. They're green. They're in an uptrend. We have all the trend agreement we could possibly ask for. Consequently, we wouldn't want to waste or throw away this trade on a simple scalp, would we? We'd want to use that scaling out exit strategy I told you about, right? So here's what we're going to do. I'm going to open up a hidden panel here called Chart Trader, and I've preloaded an exit strategy, the TradeSafe scaling out exit strategy, and it's for the NASDAQ. That's what we're looking at, the NQ, and we're going to take profits at $100. So that's what we're going to do. It's preloaded. We don't decide where to get out after we're in. We actually preload an automated exit strategy based on that. Yes, Gary, Ninja works with stocks. Works with forex too, just in case you were wondering. So now that I've shown you we've preloaded an exit strategy based on the strength of the trend, it's a scaling out exit strategy. What are the remaining steps to getting into a TradeSafe trade? There are 4 steps. The first one is trend agreement. We've covered that. The second one is a pullback or a retracement to a moving average. And here is the moving average right here. We have other ones that are part of that moving average crossover that I told you about. But this is a third moving average. And please don't ask for my settings. I know a lot of people do. I don't give away things like that. I am happy to give away other things like I have already thus far. We're looking for a pullback, just like you see over to the right, down to that moving average. We want to basically follow that same approach. See? So let me remove that and show you how the second step would work. The second step, if you are retracing down to a moving average, I can't draw a curved line in this program, but let's say that it's touching the moving average. Optimally, that's what you want. But what if it didn't quite reach? I would say there is a sweet spot, a zone of influence that you can have a tolerance for. What if it didn't quite come down? You know, you want the bar that's the deepest in this retracement. I'll draw this vertical line to represent the last bar. You can imagine the other bars coming down, right? Well, we have a criterion there. You got to have a minimum number of bars. You don't want it to spike down all at once. We want it to be a direct angle. That's covered also in the course. You don't want it to meander along. So you see we're weeding out a lot of these iffy conditions. So let's say another bar came down before it, but didn't quite reach that moving average. If it's within a specific tolerance, and the readout over here where it says Rule 21, when I click, it's going to tell you, now of course my cursor is somewhere other than the pullback would be, but when you get within that specific tolerance level, you'll see tick by tick as the bars form in real time as you're getting into that zone. And you'll know. Now, what if it overshoots the moving average and goes past it? Well, then the top of the bar would be the part closest. And if it's within that same tolerance, this same indicator will give you the readout. If that makes sense, Type a Y. Give me some feedback, folks. Let me know if you're keeping up with this, or do you have any specific questions around the logic of how this works? Meanwhile, I'm going to delete this bar right here. All right, so let me see some yeses. I want to make sure that you're really there and listening, folks. Type a Y at least to let me know that you are following. Would you do that for me? Thank you. I appreciate it. Now, I've mentioned the second step is a retracement to a moving average. Very direct, very simple, very specific. We don't want to put all our eggs in one basket, do we? We want to have some other confirmation that is different. It's uncorrelated. And that's what in the same indicator subpanel where the colored graph is down here for the trend indicator, we also have this red line. It's an oscillator. No, I'm not going to tell you what it is or what its settings are, but all it needs to do is get overbought or oversold. So if it's going to see price coming down, you want to see oversold at the same time. It provides independent confirmation to give you the confidence you need that that pullback is at its maximum point of excursion. Hope that makes sense. And the final step is we want to keep our risk under control. If you are trading the minis, for example, let's say it's going to be the NASDAQ or the Russell. A lot of people like to trade that. You want to make sure that your risk on a per contract basis is never more than $100 per contract traded. Now, if you're trading 4 contracts, in my example, that's what I have loaded here, pardon me, then your total maximum risk would be $400. But we're going to use something called a logical stop placement, which simply means that if we park an order one tick above where this bar is going to be, let's say all 4 steps have been satisfied, we put an order in one tick above it. So I'm going to put this little horizontal line there to represent what you'll see when I start up the chart. You're waiting for price to go through that. You don't want to chase the market. You don't want to use a market order. You want to use a resting order called a stop limit order. That way you get 0 slippage getting into your trade. Does that make sense? Any questions on that? All right. So what I'm going to do right now is erase this, and we're going to actually start up the trade itself, and you'll see it as the steps are completed. And feel free, just a moment here, let me move something around. Here we go. I'm going to actually speed things up. We're going to watch this pullback at about 6 or 8 times normal speed so that we don't stay here all the rest of the morning. So this is not how fast the market actually trades. We're waiting for it to come back down and be within a specific tolerance. And I will pause it when we get inside that tolerance. I'll even speed it up a little bit more. And as soon as it starts to come down within that tolerance, pardon me, then I will pause it and you can have a look. All right, let's pause it. Notice that this is a nice direct angle. I can tell you that based on our rules, we have more than the minimum number of bars required. So we've so far satisfied the second step. If you'll look down here where it says Rule 21, when I put my cursor to the right of the last bar, it's saying that it is 1 tick away from making contact with that moving average. That's the magenta colored dashed line. So I'm not going to give you what the actual tolerance level is, but I will reassure you that we are well inside the tolerance level, even we're within it on the previous bar. But if another bar goes lower, deeper in the pullback, then it becomes the new setup bar. And that's what we have working here. Now, how do you know what the risk is? Look back in that same data box where it says risk amount. I'm going to click to the right. It says the risk on a per contract basis so far is only $25. Now I've got on this countdown timer 38 seconds left, so there's no rush. on putting an order in. You don't have to white knuckle your mouse and try to chase the market. It's a very relaxed procedure. So what I'm going to do is I'm going to turn this back on normal speed, and then I'll pause it in the final, say, 3 or 4 seconds. You can watch the counter in the lower right corner of my screen. Notice that the price bar has made contact with the moving average by this time. And of course it's grown bigger, and it also means that our risk has gotten bigger. So what I'll do when I pause this, I will show you the final readout so that you'll know all of the steps have been completed. And we'll pause right now. Now somebody might ask, oh, do we have to go look at those other charts? No. Once you've established the trend agreement on the 9 and the 3 with this 1 minute chart, you don't look at them anymore. All you do is focus on the chart you take the trade on. And we already have had a nice retracement down to the moving average. You can see that the readout in the data box where it says Rule 21 says 0. That means it's actually making contact with the moving average. And then the risk amount has grown a bit. It's now showing $35. The maximum risk is $100. Now, why am I not using the same amount, 100, 100, 100 over and over? Simply put, I use what are called logical stops, because if price moves on up through the order and leaves this behind as the lowest point in the pullback, that's going to be that same familiar V-shaped bottom like you've seen in previous pivots. It's a support level. And if price didn't reach the target and turned around and went through that support level, guess what? Your trend is no longer up. So why would you want to be in a long position when the trend isn't even up anymore? It's down. That's why we call it a logical stop placement. We're going to park our stop 1 tick offset below the low of the setup bar. So let's go ahead and show you how an order is placed. With the beauty of NinjaTrader's on-chart trading, that means you can, instead of using a depth of market DOM dome and a separate window, you got to take your eye off the ball, you just position your cursor 1 tick above the high of the bar, and the high of this bar right now is at 5425.25. You can see that over on the right. We're going to go up 1 tick, and I will simply right click, and here are the orders. Always choose the third one. In this case, we're going to enter a buy order, a stop limit order for 4 contracts at that price. Watch what happens when I left click it.
Order pending.
You could hear that, I'm sure, through my speakers and through my microphone. And here is a very graphical illustration of how you would get into the trade. You're going to buy 4 contracts on an SLM, a stop limit order. If you change your mind,
order canceled.
You can do that. So I'm going to bring it back again.
Order pending.
And I'm going to slide it underneath. And you can see it's 1 tick above. So let's get into the trade. Let the market put us into the trade. And it may take a bar or 2 or more, but however.
Order filled.
And I'll pause. Now automation is just kicked in. The automation placed your stop loss order a full $100 below where you entered. That's this line right here where you entered. We're going to, as I told you, do a 1 tick offset below the low of that red candle, the setup bar. So we back off 1 tick and click. Notice that the target up here where we're going to take off half of our position is $100 above where we entered. Notice the space reward risk ratio is already favorable. So let's go ahead with the rest of the trade and let's see what happens with more automation. And ask yourselves, would you be bailing out of the trade because of all the things you've been taught and you're being subjective and you're doing seat of the pants, like, oh, it's getting close to the stop, I better pull the plug before it hits my stop? Please don't make amateur judgments like that. Let the system do it. Or if it starts to head up and you can't stand being in the trade because it just makes you too antsy, well, stay with it and trust the system. In this case, you notice it's going up and down before it even reaches the target. What if I told you that there is an algorithm built right into this automation that will move the stop to break even plus one take a profit to pay for the commissions? Watch what happens after we come down one final time and head back up. The algorithm, once it's satisfied, will cancel and replace that red line where the stop is and move it to break even where we entered and one tick of profit. So let's wait a little bit longer and watch the red line. And there it is. I paused for a moment. No change otherwise. It's still 4 contracts. It's not really a protective stop loss order anymore. It's a profit stop because it's got one ticket profit built right in. This hedges your bet so that if you don't reach the target, you still at least have a winner, and it'll pay for the trade, it'll pay the commission, and still have some lunch money left over to add to your account. Type a Y and let me know that you like that feature that at least hedges the bet, or at least that you understand what's going on so far. Yeah, give me some feedback. Terrific. Well, let's go ahead and turn it on the rest of the way and let it scale out, let it hit the target.
Target filled.
And I'm going to pause one more time. It hit the target right here, and that target line disappeared. We still have the stop, profit stop down here at one tick of profit, but guess what? More automation. Instead of 4 contracts, well, remember we took 2 of them off the table to make $100 profit. We've already made $100 close profit. So now we've changed this automatically. I didn't do it. The system did it. So we've already got a full-blown winning trade, and 2% to 4% is $100 to $200 a day. We've already made 100, so we've already made just on one trade our 2%. Now, if you want to make more than 2 or 4%, obviously, if you have a bigger account, you trade bigger size. But let's continue on. I'm going to speed this up quite a bit because I want to show you something. This is how you lock in profits as the market continues. If it didn't come down and hit the break-even stop, and there's other alerts in the background, you can hear them, we're actually going to trail a profit stop, and we're going to use a very special indicator. I'm going to move this over a little bit and bring this down. There we go. Now, notice the blue dots that have just started appearing. This is not what you think it is. It has been totally repurposed, and each bar takes 60 seconds, 1 minute to finish. So there's no hurry to do what I'm about to show you. This one just plotted, and I'm on one-time normal speed. So I'm going to just simply move this up to the dot, and I'm going to do a 1 tick offset. That way, if it hits the dot, I'm still in the trade if it likes to keep going higher. So you've got a full minute bar to bar to bar. Now, let me explain something else. This indicator is like a surface-to-air missile. It adjusts its trajectory, its rate of closure, etc., and will give a lot of breathing room if the market's moving strongly in the trending direction. But on the other hand, if it starts to stall out and go into congestion or even backfill, it's going to rush up, close that little gap there between where the market is trading and where the dots are. So watch as I speed this up to about 30 times normal speed. This is not, of course, how fast the market actually trades. But just imagine that you'd be moving that red line. You'd be moving that red line up every time there was a dot. And it takes a full 60 seconds to get a new dot. So we're going to let this just keep going and ask yourself along the way, would I have bailed out there because it was going sideways? Would I have tried to second guess the market? Oh, all these questions that traders subjectively ask themselves instead of trading a true mechanical system. So we're getting higher and higher. Notice it's hanging back because the market is really still tearing on a very strong rally. But if it starts to fade, notice how the dots, the trailing stop indicator, gets closer and closer. Ultimately, I will pause and move it one final time. We're getting very, 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 very close here. Now, remember, we're using a one tick offset. So I will pause it one last time. There we go. And I'll move it up to where the final one is and back off the one tick offset. And then let's let the market take us out. Should be a little bit more and then it'll hit it. And that pretty much gets the meat off the bone, wouldn't you say? Because you're obviously going into congestion right now. And it comes down and finally
Stop filled.
Stop fill. See, your computer even talks to you. I'm going to open up Chart Trader's profit and loss and look, $810. We had a $35 risk per contract times 4. That's a $140 risk. Look at the reward risk that you're getting out of this. No, I'm not telling you that you're going to always have these trades. What I am telling you is that based on what the market can give you, you'll be able to pre-adjust the way your exit strategies will automate. And it'll get that meat off the bone, as I say. So I have a question for you. Would you like this kind of automation with clarity of rules, etc.? Give me some feedback. All right. I already talked about that. Someone is asking about the bottom indicator. If you came in late, you'll have to watch the replay. This determines trend, okay? So because I am running out of time, I am going to switch back to the presentation, and we're going to wrap things up here. Bear with me as here we go. And trend following, folks, it's been around it's as old as dirt. But the thing is that almost nobody has tried to create a true mechanical system like this one that actually gives you the precision, the tolerances, and the automation that you need that's based on strict Boolean logic. Okay? And we use cycles-based multiple time frames. I used an example of a 9, a 3, and a 1. That's if you happen to trade the minis. Again, in a longer presentation, I show you the formula for picking out the right settings for any market. And I also show you in my other presentations on typically Thursdays, I will show you the trades from that very day. I always show those trades. I don't try to cherry pick trades. The example I showed you now is an educational example. That's why it's not from today, for example. I was trying to make a point, but I can promise you that virtually every time I do a webinar, I never ever hide the losers. I show the winners as well as the losers, and we consistently beat our 2 to 4% winning average. So all of this means that you can adapt to what the market can give you. You can keep your risk under control. You can have automation in your system so that you don't have to try to guess about things. It's all Boolean logic. It's strictly rules-based. You will have the precision you need going in. Step 1, trend agreement. 2, pull back to the moving average. Independent confirmation from the oscillator, overbought or oversold, and of course, risk. You will have those 4 conditions met, and then and only then would you park your order having already pre-selected your exit strategy. This leads to consistency. Now, there are really actually very few true mechanical trading systems out there. A lot of vendors will call their product a system. Unfortunately, they're bending the truth a little bit. They're saying, oh, well, this and that indicator when it does this or that, and it's open to subjectivity. The real true systems that are out there, I hate to break it to you, they start at about $3,000 and go well past $10,000. So even if I were to price the trade safe system on the low end of the spectrum, and don't worry, we will have a very special offer for you at the end of this presentation. Even if I priced it at the low end at $3,000, it would be very underpriced based on what other people offer, because I'm going to also give you my personal coaching. Now, when I consult with corporate clients, I bill at $500 an hour, and I get it. You're going to get me as your personal coach in my coaching room. It's not a regular trading room where, as I was saying, sometimes people will say, you know, it costs a lot of money to have a true mechanical trading system. And I already told you that even if we priced on the low end of the spectrum at $3,000, we still want to add a lot more value. Of course, we're not going to ask $3,000. We're going to give you a very strong discount today. I am a personal coach, and that's part of what comes as an addition to the Trade Safe system. You get my personal coaching. You also get a weekend webinar training, and I'm going to breeze through these pretty quickly because of the limited amount of time I have. You don't have to build your charts. All of the charting templates and workspaces for NinjaTrader come included. It's about a 5-minute process. If you get stuck, we have a help desk that'll remote access in and help you. That powerful trend indicator that was at the bottom of the screen, it was green for uptrend and so on, that's included. All of the 4 steps with the feedback for each condition being met, you will have that also included. And of course, the automation that you saw, I gave you one of 4 exit strategies, and you saw how it automatically moved stops and showed you how to trail a stop and so on. That's included. Now, you're going to basically have 3 phases: a button pushing phase where you make a lot of mistakes on paper and get used to how this works. The second one is you're going to build an authentic track record, a statistically viable track record of 30 trades. And my students, this is verifiable. My students achieve consistently about 85 to 87% accuracy, winners versus losers. Not me coaching them taking their own trades. So if you want that kind of accuracy, stay tuned. And of course, when you're in my coaching room, everything is recorded and archived. You get some special videos on tips, tricks, and techniques. You naturally get the reference guide, the manual. You'll get a business plan to map your goals. You'll also get the tools to run your trading like a business, a spreadsheet, and a journal, so that each and every trade you learn why it worked or didn't work. And last of all, I mentioned there at the beginning of the presentation that I had been a psychotherapist in a past life. I have an extremely powerful tool that will help you stop that self-sabotaging behavior. It will forge diamond hard discipline. And of course, most of my students during their benchmarking phase generate about $3,000 worth of profit. So this adds up to about $12,000 of value. Are we going to ask that? Well, normally I charge $29.95, and people say that's underpriced. But normally what we're going to, for only those who have attended today, and we will be sending out follow-up emails in a few days once I get a list of who attended, you can, if you don't want to wait for it, write this down. Daytradesafe.com and put a / and then Market Traders. Remember the 2 T's. Market Traders, daytradesafe.com, Market Traders. And if maybe Jeanette can post that link, that'll be for the rest of the group to see. But I am going to close the doors on this offer in about a week. So that'll give you some time to think it over, and you can even visit with me. You'll get in a follow-up email a link to visiting with me and asking questions. No pressure whatsoever. So what is that discounted price? A full $1,000 discount. So $19.95 for a true mechanical trading system, all the coaching, all the tools, all the automation, most of all, the consistency, and you can get your chance to ask me any question you want. In a follow-up email, you'll get a link to scheduling a consultation. I will not turn it into a sales call. I will just answer your questions. And that way you can come away feeling that your time was well spent. So let me see if anybody has typed any questions. I know I'm running a tad over. Let me see what other questions there might be. Okay, I'm not seeing any other questions. Does anyone have a question right now that I might could answer quickly, because I don't want to hold up the next speaker? Make it a quick question. Otherwise, do schedule that time with me. You will get a link to the replay of this, not only from Market Traders and Trade Thirsty, but I'm going to have, oh, that's right, I couldn't record the rest of this. So here's what I promise you. I will give you a replay to a full presentation that runs all the way beyond the 1 hour we had today. It'll go into much more detail. So I promise that I will include a link to that. How does that sound? No, this is not $19.95 per year, Gina. That's all you pay, all in. It's for life. I don't have any kind of hidden fees or licensing. Yes, and I do have results. I have students who are consistently, when they graduate, they're averaging 87% win-loss accuracy. Roy? All right, and Gary says use NinjaTrader. Yes, that is the platform that we recommend for this system. You can use others, but you won't get the full degree of automation. Time for maybe one last question, and then I will wrap it up. And Gary is saying, yeah, Gary, it's the same answer. NinjaTrader is the platform we use. Other platforms, you're going to be sacrificing a lot of the automation. But this is an open box, an open system. It's a white box. It is fully disclosed. All the settings and everything are yours. You will absolutely know how it works. So I want to say thank you very, very much. I appreciate the fact that despite the fact that we had some technical difficulties, we managed to rebound pretty quickly. Please write that link down so that you can go ahead and join TradeSafe. Just daytradesafe.com/market traders with 2 T's. Be sure and do that. Obviously, there is no time to answer any further questions, so I really encourage you to schedule time with me once you get a follow-up email. Thank you so very much, folks.